Welcome back to part 2 of an introduction to the stock market. When you start a business, there's also a risk that you will lose money. For example, right now, due to COVID-19, a lot of different sectors are going out of business. Loss is when your total revenue is less than your investment cost. How do you raise money to start a new business? Well, there are many different options. Today, I'm going to discuss a few of them. You can borrow money from a bank, and you can sell partial ownership of a company in the stock market through a process called initial public offering. You can also invest money from your personal savings, borrow money against your properties, take cash from your retirement accounts, and explore options to draw money through angel investors and venture capitalists. What are stocks? Stocks are partial ownership of a company which can be sold in the stock market by making the company public. You can also sell ownerships in your company through a process called IPO, or initial public offering. This means you have other people give you money and they have a share in the profits and losses of the company. What are dividends? Dividends are when a company makes a profit and they typically pay the owners of a stock a share of the profit and losses. Dividends are a portion of the profit distributed quarterly to its stock investors. Bye.